we have the secret words completed. So now let's try to get some questions. And these questions will be asked of the individual speakers, and then the other will have the opportunity to weigh in if they have anything they want to add, and then we'll ask another question. So, Jonathan Polonsky, we're going to turn it over to you for this question. In light of the trend toward the deal price or transaction price in Delaware appraisal, how do you think this will impact how often shareholders will bring appraisals actions in Delaware, or what types of cases will be brought?
Yeah, thank you for that. Well, I actually think we're already seeing a downward trend in appraisal actions being brought, and you know the thought is that the move toward transaction price or deal price is what's causing it. You know, I think there's some statistics showing that there was a significant drop off in 2018-19 in appraisal actions brought relative to earlier years. And in terms of what cases, you know, I think will be brought, I mean, I think that my guess is that it's just sort of the more difficult cases will be brought. So cases where, you know, there may be, you know, clearer deficiencies in the sales process, or, you know, conflicts of interest or whatnot that are more sort of obvious or easier to value would be brought. You know, I think a lot of, you know, in prior years you had, you know, in many merger cases you'd have some petitioner filing a case, but you know, I think that in the future you're going to find them only bringing cases when there's some obviously controversial aspect of the transaction. So maybe, you know, probably harder cases from a company standpoint.
Oh, thank you for that response. Andrea, is there anything you'd like to address on that, or should we take a fresh question for you?
I mean, I can jump in. I think it parallels to what Jonathan was discussing. You know, overall, as I touched upon in my discussion, you know, transactions are increasing. And in our particular example, we had reps and warranty insurance, which I didn't touch upon in detail. But oftentimes when we have when we have a purchase price dispute, there will be reps and warranty insurance, and therefore the seller no longer has the responsibility to indemnify a buyer if there is a breach of those reps and warranty. And really it is a shifting of risk to the insurer as opposed to the seller, which has increased deals, transactions over time. And we're seeing that the actual acquisitioner would include R&W, or reps and warranty insurance. And that's a large part, not only for private equity firms, but also for corporate buyers. So we're seeing overall a trend not only with M&A deals, you know, the increase in those deals, but also the increase of having reps and warranty insurance.
Andrea, are there any other reasons why buyers are purchasing R&W insurance, or is that pretty much the reason for it?
That is the deal for it. I mean, it's really a risk shifting situation. It helps private equity firms and corporations, you know, close deals faster, especially in how fast the market has been pursuing M&A deals. The number of bidders is competitive process, and so not requiring the seller to literally, you know, indemnify or agree to indemnify the buyer has actually helped the deals close faster in those instances, is my understanding.